Well, hello and welcome to this Money Control live stream. I'm Nandita Khemka, and with me is our senior consulting editor N. Mahalakshmi. Good afternoon, ML. Thanks a lot for joining in. Well, the topic of discussion today is Paytm share buyback announcement that came out last evening. Well, it was a 850 crore rupee share buyback, which is at a price of 810 rupees a piece, which is at a 50% premium to yesterday's close price. Now, ML, it seems like markets are not very enthused by this share buyback because you've seen the share price trending downwards after jumping somewhere around 6% over the last few sessions. In fact, since the buyback buzz came into play. What are you picking up? Do you think the market is actually disappointed with the buyback price or the buyback route?
So that's the conventional logic, right? Buy on rumor and sell on news.
Right.
So when murmurs about buyback came and people were speculating, the fact that they were considering it, the market ran up. And today the buyback has been announced. I mean, yesterday the market's sort of embraced that, taken that gain and it's moved on. So I don't think there is any disappointment.
Stop you here because the markets were expecting somewhere around 650 rupees as the buyback price, but now it's come in at 810, which is at a good premium.
Yeah.
But that's still way below the IPO price, which was 2,150 rupees a piece. So is that something that is kind of coming into play here?
First of all, this benchmark of 2,150, whatever is the IPO price, it's a mistake that that investors did. If anybody bought that stock at 2150, I don't think you have anybody else to blame. Today, the context of the market is very different. The market has given its verdict. Paytm, of course, has been a big loser. But if you look at any of the Nasdaq stocks, whether you look at Apple or Microsoft or Netflix or any of the startups, they're all down a minimum 30% to 50%. So even good quality tech companies have gone through a severe correction. This one is obviously a absolutely mispriced, overpriced issue. It was mispriced to begin with, and I think in Money Control also we covered a lot saying that this was a ridiculous kind of pricing for Paytm.
Right.
So we cannot really, but the context is different today. The market is different today. The environment for startups is different today, and in that context, I don't think that benchmark holds any relevance at all. So first of all, we need to separate that and erase this 2150 from our mind. In the context of where the stock price is right now, you can consider, first of all, how is a buyback price really arrived at? A buyback price is supposed to be a statement by the management saying that we find that the price of the stock in the market is below the intrinsic value as we see it.
Right.
If it is below the intrinsic value, then it makes sense for the company to buy those shares. It's just like, first of all, we have to think about buyback like just like any other acquisition. Suppose I'm a company, I want to buy another company. How do you evaluate the company? You say, well, this is the intrinsic value according to us. We want to buy if we buy it below that price, we are going to create value for our shareholders. Exactly the same way. So this is a statement that Vijay Shekhar Sharma or the management of the company believes that the true value of Paytm today is 810
rupees.
So that is their statement.
Okay.
So if you buy it below that, they believe that if they buy it below 810 or up to 810, they'll create value for shareholders. Okay. It's as simple as that.
Okay, when it comes to the buyback route, is there a bit of disappointment that it's via open market and not the tender route?
So yeah, there will be disappointment because in a tender route you are very clear and guaranteed that this is the price and you are going to get 810. Here now it is the discretion of the management today. First of all, there are two things. One is they can buy at any price. They can say, hey, today the market price is only 600. Maybe it will go to 500. So let's wait and watch. Second is there is no intent to buy only. At the rest of the year, you say, okay, we were planning to buy, but we didn't buy.
Yeah.
So what? So nothing happened. You just made a statement and the market believed it, probably ran up, didn't run up, whatever it is. But there is no conditionality out here. So markets don't like it, but that is the most efficient way to buy back shares. And if you look at all the companies that have done, even the big companies, whether it is Infosys or Bajaj Auto, whoever has declared buybacks this year, have taken the market route. So it's pretty much the wrong, and I don't see why it is wrong.
Okay, another thing I want to ask you was the company hasn't really turned profitable yet. They have guided that they will be turning operating profit, they will be handing in operating profits within the next 1 year. So at this juncture, was there really need to come out with a buyback? Because a lot of people would view it as a move to cushion the share price, given the fact that we've seen somewhere around 75% shaved off. Once again, that 2150 at play here, 75% being shaved off from the share price since its listing.
See, this is our own double standards. When the company is wanting to cushion shares, we say, oh, how come you did that and how come you did this? I hold no candle for Paytm management. The fact is that buybacks are done as a measure to reinstate confidence amongst investors, especially in a context like this. So that's one part. Sorry, I'm forgetting the question you asked.
The question was this the right time to come out with a buyback, given the fact that they haven't turned profitable yet?
Secondly, the quantum of money that is going to be spent on the buyback is much smaller than what they raised.
Because they can't really use the IPO proceeds.
They can't use, and they are not using. I think they've made a statement that they are not using. So they have enough and more cash in their books. And this is, by the way, we have to go back to last year to understand, what was the motivation behind raising so much money. The environment was different. Paytm itself was, it was a huge spender, as we all know, and that was one of the grouses, that you were just spending so much money to get your customers, so much cash burn every year on year, and you don't even know whether those customers are going to be sticky, how you're going to leverage that data, how you're going to leverage the customers, merchants, whatever it is. Now today we are in an environment where every venture capital, every private equity guy is going and telling those investing companies that you have to cut down on your cost, you have to reduce your cash burn, and therefore everybody is recalibrating. So today, after 1 year, if Paytm says that, hey, instead of 9,000 crore, I'm going to spend only 8,000 crore or 7,000 crore over the next few years because I want to bring down my cash burn, I don't see anything wrong with that. That is pretty much in line with what the rest of the environment is.
Right.
I think we are all prejudiced today by the fact that the stock has given away 70% in value, and that's a humongous loss. Obviously, this brings into question the whole pricing mechanism. What is the role of the merchant bankers? By the way, one data point you might want to think about is merchant bankers got paid 400 crores for this issue. It was one issue where they got paid for what? For mispricing the issue. It was not for the benefit of investors. It was because there were a lot of shareholders who were selling out and they got the maximum value. So the problem lies elsewhere. What is getting, so we shouldn't muddle. The problem was with the pricing, and unfortunately investors have paid the price for whatever happened. Today, therefore, to see this buyback in the context of all the wrongs that have happened in the past, I don't think that is that's very right.
Right. When you talk about the share price and the future of Paytm, in fact, brokerages have also of late been turning bullish on this stock. Mentioning CLSA here, they have given out a buy rating from a previous sell rating on the stock, and they also expect the cash burn to kind of subside in the next 4 to 6 quarters. So given this, the general sentiment in the market towards the stock, would you say it is a buy on dip? Is that what market men are saying about the stock going forward?
Well, if you ask me, the sentiment on the street has improved, and the management is saying the right things in the sense that they are clearly saying that we want to reduce cash burn, we want to become profitable, and they have also shown, to be fair, they have shown pretty good growth in the last quarter. And if they are able to,
correct,
and in the next few quarters, if they walk that path, obviously the financial complexion of the company is going to get a little better. But if you ask me, I am still not supremely convinced about the business model for Paytm, and I don't know how they are going to be able to leverage it, and whether it will justify a market cap of 40,000 crore or whatever it is today is a big question. So if the business model in investing, I think the one lesson I have learned is you can't go the reverse. You can't say, let's look at valuation, is it cheap, and then look at the business model and then the management. You have to first say, is the business model good enough? Is it going to throw cash year after year? And then am I paying the right price? So just because the stock price has come down, are we willing to, should we look at it, is not the right question to ask. The question is, does it have a good business? It is a niche play, but it is challenging and gunning to become a superpower. That is the promise,
there is the risk
right?
from Geo Financial Services as well. That was, I think, flagged off by one of the brokerages, if I'm not mistaken. So that risk is also there for
that
Paytm.
is there, but you know, if in any entrance, so for example, even Nykaa is getting challenged everywhere. There are smaller brands and
Purple
there are
and
bigger
stuff,
brands, Purple and stuff also, and the names that you mentioned, even they have, Reliance has bigger plans to go into that space. You know, tomorrow Amazon wants to do it, they can also do it. So right now it's not there, but competition can come from anywhere and everywhere and challenge these places. But do you right now have the competitive advantage? Have you established clear leadership in some place which shows a clear path of cash flows year after year? That is not visible in Paytm, at least to me right now, and that would be my biggest concern. And therefore, I would advise this is still a counter that doesn't inspire confidence.
A counter that still doesn't inspire confidence, but we'll have to wait and watch, given the fact that the management has said that it is looking to turn profitable by next year. So if that happens, then of course, I mean, we'll have to wait and watch. Well, with that, thanks a lot for joining in to this live stream. But before we go, just wanted to tell you, please tune in for to moneycontrol.com for our mutual fund summit that's happening at 4 p.m. today. You can watch it on our social handles as well as on moneycontrol.com. So tune in.
Thank you.